Okay, recording this video on Sunday, the 27th of May, 2018. Do hope you are doing well. So we've got ourselves a long weekend, Memorial Day coming up, so it's going to be a little bit quiet on Monday. I think they've also got a bank holiday in the UK, so potentially nothing much going on until Tuesday, but I'm going to be watching my charts like a hawk because equities market is looking really, really interesting. I'm going to review in this video just the bond market because last weekend's video was very prescient. We had a super, kind of strong reversal happen in bonds this weekend that I talked about in last weekend's video. Equities market, we've got something kind of also starting to happen. A little bit of speculation on my part. I'm kind of known for being like an uber bear. I think maybe I backed off on that a little bit over the last couple of years. But anyway, I want to go through that setup and just show you what I'm seeing on my charts because it could be interesting. So here we go. This is the TLT chart of bonds. A little bit busy going on here, but let's just review what we were looking at last weekend, which was this confluence of turning points happening on the low, intermediate, and highest time frame. And there we go. We got a double end of trend on the low and intermediate time frame go off this week, and bang, 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 nice little rally. Also happened a blue professional down bar, kind of catching the lows down here, testing that previous low. We also had a bullish divergence pattern. The convention I use with my bullish divergence patterns is as soon as the signal is triggered, I plot the signal on the price bars, and then the momentum dip or high that is triggering that signal is then shown with a little red dot on the momentum line itself. So that's why there's a difference there. It went off on that day, but it was referencing that particular little dip in the momentum pattern there. So I think bonds are looking interesting. Over the next couple of days, the highest time frame support level is going to come in at some point there, and that's going to be kind of good for support on bonds. Same thing happened on the US, which is the 30-year bond contract, and you can see this is where they all bought it, bang, bang, bang. I think it was the results of all the Fed notes that kind of came out. And I don't know, are they more dovish, less dovish, whatever? Bonds kind of bottoming down here. Triple supports. End of trend on the lowest time frame, support on the intermediate time frame, support on the highest time frame. Comes in there. We had our bullish divergence a few days ago on the 30-year bond chart, and then bang, 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 they just bought it because they're seeing that as an important low for the time being. So there we go. That is bonds. So let's see where that goes. We've been having this bearish swing for the last 6 months, really, in bonds, and it's time for a little bit of a correction, kind of going the other way, move in the opposite direction. Now, equities, we have a very interesting situation happening. We also have confluence of turning points. So here we go. This is the low and the intermediate time frames. We've had a cross here and here. We had an end of trend on the lowest time frame back here. We had cyclical resistance come up, cyclical resistance, and then this week we had that end of trend on the intermediate time frame. So we've got ourselves two time frames kind of lining up there with resistance on the low and intermediate time frame. And we've also found ourselves in a situation, this is just looking at the daily chart here, where we've, over the last 2 weeks, kind of come into this high up at 2750, and we've got Rambo patterns. So we've got amateurs active at these highs and unable to kind of push through at this point. So they're kind of buying in expectation of a breakout above this kind of level. And Rambo stands for potential reversal of an amateur breakout. And so the amateur's trying to buy the breakout and its potential to get reversed. What do we see in terms of volume momentum? So this is our exhaustion into January high, and then our big kind of sell-off, an exhaustion sell kind of down here. And then we've been playing within this big range. They bought it on this dip here, so the last time we kind of came in at 2600, the professionals kind of came into it and held it. And at this point here, 2750, and at the lows from Friday, 2713, 2710, even 2700. That range is really important. If I'm all wrong about this being a kind of turning point, and we kind of blast through the highs on Friday and go through 2750s, Tuesday, and everything's kind of good, then it's negated. This kind of setup is kind of goes away, and we have to start to look to the next end of trends and whatever lining up. But I see a couple of other things kind of confirming that would suggest that maybe we're going to have a little bit of a dip. So let me just roll through the MTF charts on the lowest time frames. So you can look at the MTF signals on a daily chart, and the MTF is looking at 3 time frames: low, intermediate time frames, low, intermediate, and high time frames, and they're all a factor of 3 different from each other. So we're starting to see these end of trends on the kind of intermediate time frame here on the daily chart. If you back it down to the 135-minute chart, so remember there are exactly 3 135-minute bars in a daily chart. So here this is at ES.D. You can see here we've made pullback to end of trend, and again we've got this whole confluence of end of trends going off. On the low and intermediate, and we've got cyclical resistance on the highest time frame, end of trend on the highest time frame. So we're reaching this really important resistance level that's kind of coming in. And I always talk about triples. Big things happen at triples. Back it down another time frame, so 45 minutes, so 135 divided by 3 is 45 minutes. So here we've come up to cyclical resistance, pull back to end of trends, pull back to end of trends here, cyclical resistance, and we've got the first little sign of weakness kind of happening here on the 45-minute chart, and then going down a time frame again, so divide that by 3 to the 15-minute chart, and here you can see we've had pullback to end of trend on the highest time frame, on the lowest time frame, and all this weakness starting to come in over the last several days. Bang, 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 all white bars kind of here, and it's showing that the supports at 2713, 2710, around there. If we start to break that on the downside, then we'll start to move into a strong kind of downtrend on these time frames. So I know that's a little bit complicated going through all the different charts, but it's just showing to me that this is a really important cyclical level. We've ended up putting in all these patterns. It takes a lot of time for all of this cyclical energy and trending energy to play itself out. And finally, after all of these moves, over the last several months, we're coming back up into this last roll gasp kind of up here, where there's not enough puff to get us through and break to the upside. Now, let's wait and see. It would be nice to see the blue professional bars kind of taking profits up here. Been nice to see some kind of exhaustion pattern on volume on the lower time frames or something like that. We don't have that. It's not kind of a picture perfect setup for me, but all of that cyclical energy kind of coming to an end on all of those charts kind of all at once this week means to me something is in the works. Now, if you look at kind of capital flows domestically, what we're seeing then is capital flows flowing towards bonds again. So we've had this period where, in the last 6 months, bonds have been very weak. This week, we put in a low in those bonds, and the capital is starting to flow into bonds. So domestically, capital could be moving out of equities and towards bonds. Okay, and we see that in the bond chart. So this is a little indicator, the spread kind of indicator that I look at, the SPY versus TLT. So this is the 2 ETFs looking at the S&P 500 versus the long-term bonds. And you can see we're kind of overbought on bonds up here. We got a nice signal up here with the high back in January, and then we come back again, what is that, March. Nice little kind of overbought signal here. This time we had a little one kind of early a few days ago, and then we've been just sitting at those highs, and you can see it's just starting to roll over. And as the bond market is strengthening, the equity market, it just shows relative overbought, oversold. We've been oversold in equities here versus bonds, and we've come to the other side of that equation, which is we're kind of overbought in equities and oversold in bonds. So the bonds are starting to rally. Are we going to see a little kind of dip in the equities as well? I also look at this kind of on a long-term perspective. That's the daily chart and the weekly chart. You can download this indicator. It's a pretty simple code. It's available on the site. And when this starts to break below the zero line, we have periods of equity weakness. When it's above the zero line, we have periods of equity strength. And this thing is coming down to 4, maybe heading towards 0, which could signal some weakness. Now, I use exactly the same indicators to look at the yen versus the equities, and so this is the carry trade. Again, it's looking at overbought, oversold versus the yen. You can see here the yen was strong, equities was weak, and so we were oversold on equities. Both here, we came back again, here and here. Yen was overbought, equities was oversold, and the equities market kind of rallied. Now, over the last few days, it's shown that equities overbought, yen was oversold. And so we've kind of topped out here. And this is the carry trade. So this is looking at maybe international flows where the money is flowing back into Japan from the carry trade and out of kind of higher risk, higher growth opportunities, which would be equities and equities in emerging markets, equities in the US and equities in emerging markets. So if we have strength in the yen, that means people will need to repatriate funds into Japan, and it'll take the wind out of the sails of the equities market in the US. Same indicator here on a long-term basis. That's the daily chart. This is the weekly chart. I use exactly the same indicator, and just to see the moves above and below the zero line. And so you can see periods of equity strength where we're above the zero line, periods of equity weakness when we're below the zero line. And just over the last several months, this is the versus the yen has been showing we've actually got weakness going on in the equities market here, and this thing is breaking below the zero line. We had a bounce the week before, but this week we've come down to a -4, and so this could start to kind of trend down with this kind of look of the chart kind of going forward. So what does all that mean? Let me just recap. So on the MTF charts, let me go back to this. On the MTF charts, the multiple time frame charts, with the cyclical activity, what I'm seeing this week is a really important cyclical resistance kind of high coming in potentially. So that's on kind of the technical analysis kind of side of the market. And then when you look at the capital flows, both domestically and internationally, on the domestic side, the money is moving into bonds because bonds are starting to rally. So does that just naturally mean some of the wind is taken out of the sails on the equity side, and so the equity side starts to weaken. On the international capital flow side, we see the yen strengthening, and so money being repatriated back into Japan and out of the US equities market. So a couple of those capital flows are moving in the opposite direction than they have been over the last several months. And it coincides with this cyclical resistance on a whole bunch of time frames on the equities market. So for me, that's an important kind of turning point. Now, I'm just going to talk about the strength in the yen and the euro just for a minute here. So this is what we've had over the last couple of days in the yen here. We had cyclical resistance kind of come in. We know the USD has been super strong over the last several months, but now the first one to kind of turn on the other side is some strength in the yen. Blue professional bars kind of buying these lows, getting us through the 90 level and starting to look perky, kind of moving up. The other one that's interesting to me, that would be interesting if it's starting to change, is, again, we've had weakness in the euro market, but we've got a couple of blue professional bars starting to come in here. There's nothing in terms of turning points to hold this or anything like that kind of going forward. But the news out of Europe is pretty bad. We've got kind of the bond market in Italy looking sketchy, the same in Spain. We've got political we've got political kind of changes happening within Italy and in Spain. And we've known those are kind of, pigs, known as the pigs, that kind of, there are some issues that they have with their banking industry and so on. If we start to really, the crisis that we really see a crisis in the banking industry in Europe start to develop. Remember that the lesson that we learned from the crisis, or that I learned certainly from the crisis in the US in 08, 09, was that the currency strengthened. So as soon as there's a crisis, people need to repatriate funds, they need to secure their balance sheet, they need to kind of get out of risky assets, move into safer assets, and the currency actually strengthens when we have a crisis. So 08, 09, the USD did well because everybody was repatriating funds and shoring up their balance sheet. So if we start to see a crisis in Europe, are we going to see the same thing? Are we going to see the euro start to strengthen because people are saying actually we need to shore up things? The news this week out of Deutsche Bank was pretty bad. They're laying off, I think it was 9,000 people or so on. I mean, it's been a series of layoffs for Deutsche Bank over the last 10 years. Seems to be always they're laying off. They're kind of systemically important in the market. So is the whole European banking crisis and bond market story starting to percolate up again, and we come back because we've been able to forget about it for the last 2 or 3 years as Draghi has done his business in Europe, but maybe he's not done enough in order to kind of save the situation. So I'm looking at the euro chart to see if we get strength in the euro, which would to me signal that people are a little bit scared, need to shore up some balance sheets, capital flows out of risky markets, emerging markets, US markets into back into Europe in order to cover margin calls, shore up balance sheets, all of those things. So all of that's speculative, but this week I think is pretty important. Let's see those levels on the E-mini. Are super important, and gives us a tight range to play. It's kind of 50 on the upside, it's 2700-ish on the downside, and let's see which way it kind of breaks. I was going to talk about some other things, how to play this. I'm just going to mention these really quickly. If you want to kind of pull them up on your charts, you're kind of welcome to. If you wanted to play a kind of a sell-off in equities and a sell-off in emerging market equities, which would be stronger than a sell-off in the US equities, there's Yang, which is an ETF, YANG. That's a short Chinese market. I think it's a triple as well, so that's pretty interesting. You get a pretty big bang for your buck, kind of going with that short. I know crude has had a nasty Friday, certainly, big sell-off. I'm kind of going to wait and see. It's not a typical kind of blow-off pattern for me, and we'll see if the professionals were buying that kind of sell-off on Friday over the next week. But what I have got into is natural gas. I tried to play this last year and got badly beat up, but I'm trying it again, rally and natural gas, and the thing I'm playing is UGAS. The chart on this looks really bizarro because this thing moves around like no one's business. But anyway, we've got some strength happening in UGAS, which is kind of long. I think it's a triple long on natural gas ETF. Again, with all these doubles and triple ETFs, they're not designed to be held medium or long term. So that's not their design. They're really for day trading. So just a warning about that. But I happen to be playing them on a longer term hold and see where they go. That one's working out quite nicely for me. I've been in that one for a week or so. Anyway, so there we go. A bit of speculative kind of analysis from me this weekend. We've got a long weekend to kind of consider what happens. Tuesday, Wednesday, Thursday, it's going to be really important days. So going to be watching my charts like a hawk and see if we got something setting up that looks interesting. Anyway, enjoy your weekend and good luck trading next week.